As we continue our breakfast, I think we can start the proceedings of the day. Honorable Minister of Finance, the Governor of the Central Bank of Eswatini, members of both Houses of Parliament present in this forum, Board of Directors of the Central Bank, members of the Monetary Policy Consultative Committee, CEOs of commercial banks and non-bank financial institutions, CEOs of private sector and public enterprises, representatives of international and non-governmental organizations, senior government officials, central bank management and staff, distinguished guests, ladies and gentlemen, good morning. And good morning to our stakeholders that have joined online. This morning, the Central Bank of Eswatini is once again honored to present to you the Governor's Annual Monetary Policy Statement for the year 2023-2024. The bank remains committed in fulfilling its mandate of formulating and implementing sound monetary policy to ensure price and financial stability that is conducive for economic development in the Kingdom of Eswatini. The Governor today will articulate the economic conditions, both international and domestic, that influence the monetary policy decisions taken by the bank during the period under review. He will also outline the monetary policy outlook for the upcoming year. This morning, however, the Governor will not indicate his interest rate stance. Ladies and gentlemen, we can safely say this year has been quite busy, with countless international events and developments that informed the domestic and international economic landscape. These include ongoing international geopolitical tensions such as Russia-Ukraine, Israeli-Gaza, and other conflicts in the continent. All these events have and continue to contribute immensely to rising inflationary pressures, which consequently led to interest rates remaining elevated for longer than anticipated, as central banks globally left interest rates unchanged in the recent past. The interest rates levels remain abnormally high. Ladies and gentlemen, in the region, issues such as the persistent load shedding in South Africa, inclemental weather leading to floods, hurricanes, and storms, and the uncertainty following the recent South African elections have slowed economic recovery and further exacerbated inflationary pressures. Furthermore, the combination of international and South African factors have led to significant capital outflows, thus negatively affecting the value of the rand, hence the Lilangeni, when compared to other major currencies. Given the parity of the Lilangeni to the rand, the central bank remains committed to safeguarding price and financial stability by pursuing policy stances that protect the peg. Distinguished guests, ladies and gentlemen, may I take this opportunity on the behalf of the board, the management and staff of the bank, to extend our warm welcome once again to you all to the Governor's Annual Monetary Policy Statement. The bank, in pursuit of price and financial stability, with excellence and lightning speed, Nkwe, a success story for the next 50 years, is the theme of today's monetary policy statement. I strongly believe that this event will provide a forum for the exchange of views and fruitful deliberations between you and us, the bank, leading to enhanced delivery of our mandate. With these few remarks, may I call upon the Governor, the 7th Governor of the Central Bank of Eswatini, Dr. Phil Mnisi, to present.
The minister said 7 is a, did you say a nice number or a good number? Program Director, the Deputy Governor, Honorable Minister for Finance, members of both Houses of Parliament, senior government officials, Central Bank Board of Directors, members of the Monetary Policy Consultative Committee, heads and representatives of banks and other financial institutions, CEOs and representatives of private sector companies, management and staff of CBE, representatives of the media, distinguished guests, ladies and gentlemen, and all protocol observed, good morning. Before I go into my monetary policy statement this morning, let me, off script, make you aware that it is long. So your energy levels must be very high. I hope mine will stay as high too. The second point is that as I go through the policy statement, there will be some exhibits on the screen which are synchronizing with my narrative and messaging. I encourage you to look at the screen, and by the way, from time to time, also look at me, just for engagement, so that I can get a sense that you are here with me. It is my honor to present to you this year's Governor's Annual Monetary Policy Statement under the theme, The Bank in Pursuit of Price and Financial Stability with Excellence and Lightning Speed. Nkwe, creating a success story for the next 50 years. Distinguished ladies and gentlemen, last month, the bank celebrated its 50th anniversary in an event that was graced by His Majesty, SADC Central Bank governors, and some of you present here today. This huge milestone would not have been possible without the continuous support from you as our key stakeholders. We are grateful for your continuous support of our initiatives. This helps us as the Central Bank of Eswatini to fulfill our primary mandate of achieving price and financial stability that is conducive to economic growth and development in the country. Program Director, the year 2023 was a challenging year to the global economy with subdued growth owing to a number of factors which I will allude to later on. Even though inflation has broadly moderated at different speeds across economies, risk still persists and interest rates remain steady at restrictive levels. My address this morning shall outline some of the key international, regional, and domestic economic developments that influenced the bank's monetary policy decisions over the past year. I will further provide insights on the monetary policy outlook for the year 2024-2025. 2024-25 financial year. Distinguished ladies and gentlemen, let me start by highlighting developments in the global economy. The IMF's economic outlook published in April 2024 estimates global growth at 3.2% for 2023, and it is projected to be steady at this level in 24 and 25. The pace of growth is low by historical standards due to both near-term factors such as elevated borrowing costs, withdrawal of fiscal support, and longer-term effects from the COVID-19 pandemic. The Russia-Ukraine conflict, weak growth in productivity, and increasing geo-economic fragmentation. The IMF highlights that risks to the global outlook are broadly balanced, implying fair equilibrium between positive and negative factors that could impact economic growth going forward. Negative factors to growth outlook include geopolitical shocks, high interest rates, while positive factors include a faster moderation in inflation, which could see interest rates cuts being pushed forward, and the embracement of artificial intelligence and stronger structural reforms than anticipated. According to the IMF, global inflation is expected to decline to 5.9% in 2024 from an average of 6.8% in 2023. In 2025, global inflation is expected to fall further to 4.5%, noting that across the global economy, inflation is projected to fall at different speeds. Ladies and gentlemen, Program Director, let me now turn to economic developments in the neighboring South Africa, which is Eswatini's major trading partner. According to Statistics Agency of South Africa, real GDP contracted by a marginal 0.1% in the first quarter of 2024. This followed a revised 0.3% increase in the fourth quarter of 23. Weaker manufacturing, mining, and construction drove much of the downward momentum on the production supply side of the economy, while the expenditure, the demand side, witnessed a decline across all components. The IMF forecast a slow and steady climb for the South African economy, with a 0.9% growth rate in 24 before edging up to 1.2% in 25. This modest growth is attributed to weaker external demand, power shortages, and structural constraints. South Africa's annual inflation rate slowed down to an average of 5.9% in 23 from 6.9% in 22. During the year 2023, South Africa's inflation rate has been pressured by imported goods that rose significantly and remained sensitive to currency weaknesses. Over the opening 4 months of 24, South Africa's inflation averaged 5.4% within the SARB's target range of 3 to 6%, but above the midpoint of 4.5%, which they aim for. Since January 23, the South African Reserve Bank increased the repo rate by a cumulative 125 basis points from 7% to 8.25% by May 2023, citing inflationary pressures. The repo rate has been maintained at 8.25 to date. The SARB forecasts inflation to edge lower to 5.1% in 24 and 4.5% in 25. Risks to the inflation outlook are assessed to be broadly balanced. Program Director, let me now focus to the monetary policy developments in our domestic economy. Let me start by reaffirming the mandate of the central bank as enshrined in the Central Bank Order of 1974 as amended, which is formulation and implementation of sound monetary policy in order to attain price and financial stability. Monetary policy formulation in Eswatini is largely influenced by the country's membership to the Common Monetary Area. In that regard, the intermediate goal for monetary policy in Eswatini is to maintain the fixed exchange rate with the South African rand, not inflation targeted as some people believe. However, in response to domestic and regional economic developments, the central bank has the liberty to use the discount rate as a major policy instrument to fight domestic inflationary pressures and curb capital flight. Program Director, in determining the monetary policy decisions, the bank consults with the Monetary Policy Consultative Committee, whom I can applaud for a job well done during their term in office. Please give them a big hand of applause. I must now find a paragraph to thank the board. Should I mention a board somewhere, just clap. If not, I will find a way of getting the board mentioned. Over the review period, the MPCC met 6 times to determine the monetary policy stance of the bank. Overall, the bank pursued a restrictive monetary policy stance in 23, increasing the discount rate by a cumulative 100 basis points from 6.5% in December 22 to the current level of 7.5%. The bank was responding to inflationary pressure in Eswatini in line with the anchor economy, which is South Africa. The bank first increased the discount rate by 25 basis points to 6.75% in January 23, which was followed by a 50 basis points hike in March 23 to 7.25. The bank further increased the discount rate by another 50 basis points in May 23 to 7.75%, after which the bank adopted an easing stance and reduced the discount rate by 25 basis points to 7.5% in July 23. This stance has been maintained for the remainder of the review period and up to date. Distinguished guests, let me now turn to the developments in the domestic economy. According to the macro forecasting team, as of January 24, the country's economic output as measured by GDP is estimated to have increased by 4.8% in 23, up from a 0.5% in 22. The improvement in economic activity was largely accounted for by the strong performance from the tertiary sector, which accounted for 4.4% points of the overall GDP outcome. On the fiscal sector, SACU receipts grew by over 100% from 5.8 billion in 23 to 11.8 billion in 24. That's financial year 23-24. The rise supported the government in implementing its programs on both current and capital expenditures, thereby supporting growth in the subsectors of the economy. On the other hand, quarterly gross domestic product grew by 7% year on year, seasonally adjusted, in Q4 of 23, slightly higher than the revised growth of 6.8% recorded in Q3 of 23. Growth largely emanated from the tertiary sector, while both the primary and the secondary sectors contracted. Real GDP growth is expected to marginally increase to 4.9% in 24 from 4.8% recorded in 23. In the medium term, growth is expected to be broad-based, driven by all 3 sectors of the economy. I think let's appreciate growth in the country. Let's give a big hand of applause for the anticipated growth. Let me pause here. When we have got growth, we see unemployment eradicated, we see poverty eradicated, productivity increases, and this country will be a place to envy. So that's why I want all of us to embrace this. Of course, government play their part, the private sector play their part, and all other socio-economic contributors are acknowledged. But this must be the ambition of the country. Eliminate poverty, deal with unemployment, improve productivity and efficiency. Program Director, consumer price inflation averaged 5% in 23, marginally higher than 4.8% recorded in 22. The inflation trajectory during the year under review depicted elevated price increases in the first half of the year and a gradual moderation in the second half of the year, broadly in line with food inflation developments. In the first quarter, or in the first 4 months of 24, inflation averaged 4.27%, which is lower than 5.9% average registered in the same period in the previous year. Ladies and gentlemen, I will now look at our monetary sector developments in the domestic economy. On a year-on-year basis, credit extended to the private sector grew by 10% in 23, compared to an average of 4.2% in 22. The growth in credit was mainly visible in the business sector, reinforced by persistent economic recovery in most industries. And here I pause, and I want a group of people to be appreciated, because in 2021-22, we had about 15-odd billion, failing to cross 16 billion, and now we are over 19 billion. May I please give a big hand of applause to our banks for intermediating appropriately. And that is their job. Take deposits, secure the deposits, don't play with depositors' monies, intermediate through credit, create value, contribute to economic growth. As in speech. During the first 3 months of 24, private sector credit continued to rise, reflecting year-on-year growth of 10.3%. I think I've read this. In the short to medium term, private sector credit growth is likely to remain positive, supported by continuing economic recovery locally, regionally, and globally, as well as possible interest rate easing. On the other hand, credit growth may be reduced by economic uncertainties as well as unpredictable weather patterns, which may negatively affect agricultural production. Gross official reserves improved markedly in 2023 from a relatively lower levels observed in 22. This development was attributed to the higher SACU receipts during 23-24 fiscal year. Notably, the reserves accelerated to reach a high of 9.4 billion, covering 3 months of imports in April 23. In terms of imports, the reserves were within the international threshold of 3 months of import cover. At this level, the reserves indicated a significant improvement from a low of 7.6 billion and import cover of 2.5 months in December 2022. I think you can see it in that exhibit. During the first 3 months of 24, the reserve maintained higher levels, but due to rising imports, the import cover remained below the 3 months threshold. At the end of March 24, the reserves amounted to 7.8 billion and sufficient to cover 2.2 months of imports based on revised import figures. As at last week, Friday, 7th June 2024, the gross official reserve stood at 9.4 billion, equivalent to 2.6 months of import cover. In the short to medium term, the reserve's position is expected to remain high, owing to 11.2% increase in SACU receipts over the current fiscal year. Program Director, I will now turn to developments in the fiscal sector. On the fiscal side, a key initiative developed by government in collaboration with the bank is the establishment of the Revenue Stabilization Fund, which is meant to serve as a buffer considering the volatility of SACU receipts. This fund currently holds 1.28 billion. I think PS asesimshayele intandla phezulu. Sengifaka nani ke ibhodi. Sale ngena bhodi ngoba PS uyi-board member. Siyabonga kakhulu PS ngoba funa nje nyalo siyisebenzise kahle ke le stabilization fund. Kuze vele sibe stabilization. Singabi risk. Siyabonga kakhulu PS. Government has committed to add a total of 1.5 billion in the current financial year 24-25 budget cycle. Already, 375 million was deposited into the fund in April 2024 when SACU revenue was received. Coming to public debt, total public debt stood at 34.4 billion as at the end of March 24, translating to an equivalent of 37.1% of GDP. And this indicates a growth of 4.2% from 33 billion recorded in March 23. The growth can be attributed to a continued exercise by the government to issue securities, whilst external debt remain almost stationary. At the end of April 24, total public debt stood at 33.3 billion, an equivalent of 36% of GDP. Ladies and gentlemen, let me mention that this is a very good measure for the Kingdom of Eswatini. When we compare with the CMA countries, their level to GDP, their debt to GDP is quite high. In fact, I think we are the only one that is below 40%. Others are sitting at 63, 73%, and other countries in Africa are even over 100% of GDP. So this becomes a concern in terms of managing and implementing monetary policy when the fiscus is out of control. Ladies and gentlemen, allow me now to walk you through the developments in financial markets. The central bank actively participated in domestic market by purchasing foreign currency acquired through export proceeds from the local banks in an endeavor to build reserves and provide a buffer against the effects of net outflows. Since inception of this strategic initiative to build up foreign reserves, an equivalent of 24.6 billion has been settled as at 31 May 2024. The total value of trades conducted over the financial year 23-24 amounted to 6.47 billion. Ladies and gentlemen, the Johannesburg Stock Exchange listing process of a ZAR bond of a ZAR 4 billion program has been completed. The first issuance under this program was undertaken in May 24, and a total of 400 million was raised for a period of 3 years at a yield of 11.875% per annum maturing on 8 May 2027. Subsequent to the first issuance, a ringing of the bell ceremony was held at the JSE to formally introduce the Kingdom of Eswatini as a sovereign borrower in the South African market. Ladies and gentlemen, allow me now to turn to developments in the external sector. Preliminary data, they always say when you stumble, slow down. Preliminary data shows that Eswatini's balance of payments recorded a surplus of 2 billion in 23, following a revised deficit of 2.1 billion in the previous year. In 23, Eswatini recorded a positive trade balance of 3.1 billion. The balance reflects a significant increase of more than double the trade surplus recorded in 22, with total exports growing by 12.5% year on year to 37.5 billion and imports growing at a slower pace of 6.8% to 34.4 billion. In the year ended December 23, the external value of the rand Lilangeni significantly depreciated against the major trading currencies. Compared to the value of the currency in 22, the Lilangeni fell sharply by 12.7% against the US dollar to trade at an average of 18.45 in 23, from an average of 16.37 per US dollar unit recorded in 22. The significant depreciation in the domestic currency was largely due to a mixture of global and regional factors which led to significant capital outflows in South Africa. From a regional perspective, the rand along with the Lilangeni were under pressure as South Africa continued to be confronted by persistent threat of non-stable electricity supply. The first quarter of 24 was characterized by volatility in the local unit, where it lost some ground in February to trade above 19 emalangeni mark before recovering in March 24. The local unit opened the year at an average of 18.8 to the US dollar and closed the first quarter at 18.85 to the USD. The depreciation of the exchange rate was mainly on account of elevated US Treasury yields and concerns over South Africa's economic outlook, including sluggish growth and fiscal challenges that weighed on investors' sentiments, leading to capital outflows. The Rand Lilangeni outlook remains volatile. Vulnerability is expected from several factors, including the low probability of interest rate cuts in developed economies and significant escalation of the Middle East conflict. All these pose risks. Distinguished ladies and gentlemen, allow me now to talk about the inflation outlook and monetary policy stance. The bank has revised down its short to medium term inflation focus. Downside pressures to the short term inflation outlook are expected to come mainly from the lower South African inflation outlook, which remains muted when compared to the previous period. While there are inflationary pressures coming mainly from the higher crude oil prices and a weaker exchange rate, overall domestic food inflation outlook outweighs the upward pressures. In the medium term, oil prices are expected to moderate gradually, coupled with appreciation in the exchange rate. In May 24, the bank revised down the annual average inflation forecast to 4.5% from 4.9% for 2024, 5.13% from 5.21% for 25, and 4.92% from 5.37% for 26. In the short to medium term, monetary policy is likely to be maintained at the current restrictive level for some time before a gradual easing is considered. This is in line with the prevailing risks to the inflation outlook. Negative risks largely emanate from the impact of adverse weather conditions in the Southern African region, extreme heat during the first quarter of 2024, which we all saw and experienced. On food production, leading to higher food prices, persistent conflict in the Middle East, causing trade disruptions and oil market volatility, and the increase in administered prices. The positive inflation outlook is largely supported by global disinflation arising from the easing of global international food prices and the lower inflation in South Africa, as you can see in the exhibit. Program Director, allow me now to look at the operations of the financial sector, starting with the banking supervision. Banks complied with minimum capital and liquidity requirements during the review period. The average industry-wide regulatory Tier 1 capital adequacy ratio and total capital adequacy ratio stood at 16.25% and 18.38% at the end of March 24, from 16.3% and 18.6% recorded in March 23, respectively. On the other hand, the industry's liquidity ratio stood at 33.4% from the 36.0% recorded in March 23, affirming the sector's robust liquidity position. The banking sector's asset quality, as represented by non-performing loans, slightly improved as they decreased from 7.2% in March 23 to 7.1% March 24. Household NPLs were 7% of total household loans, whilst business NPLs were 8.2% of total business loans. The bank has successfully implemented Basel II regulations, along with certain elements of Basel III. Banks diligently submit their internal capital adequacy assessment process documents and fulfill their Pillar 3 disclosure obligations. Currently, efforts are underway to enhance the supervisory review and evaluation process template, drawing insights from global best practices. Program Director, allow me now to turn to policy, conduct, and enforcement. Bev said we must reconsider the word enforcement, but I don't remember which word she suggested. Do you remember, Bev? Maybe we'll call it policy, conduct, and monitoring. But she says even if we do that, it will still be enforcement. The bank, through the Policy Conduct Enforcement Division, discharges its functions for licensing, policy formulation, and regulation framework development, market conduct supervision, and enforcement to uphold its financial stability mandate. In the year 23 saw the bank finalizing and issuing guidelines to supervised institutions under its regulatory and supervisory purview. These are AML-CFT Risk-Based Approach Guidelines, number 1 of 23, Loan Portfolio Management Guideline, Corporate Code of Conduct Guideline, number 3, and the CBE Areas and Foreclosure Guidelines for Banks, number 4 of 23. Program Director, I will now speak on the national payment systems. The bank continued to monitor, coordinate, and participate in payment systems development in the Eswatini payments ecosystem. This development included promulgating of the National Payment Systems Bill 2022 into law in June 23. This law mainly addresses identified barriers to entry of non-bank payment service providers, supports innovation and financial technology developments. The review of the legal framework is aligned to the SADC payment system model law and to international standards. The bank continued to monitor payment operations in the Eswatini ecosystem and conducted inspections on designated payment systems and mobile money transfer services during the period under review. Based on the regulatory framework, no material exceptions were observed during the period under review. The CBE continued to implement the National Payment Switch, featuring fast or instant payments, open banking, card-based point of sale, and card-based automated teller machines module. This payment switch will facilitate system interconnectedness and interoperability among and between banks and non-bank financial service providers. It will enhance customer experience through heightened digitization and to extend financial inclusion to the underserved sectors. In line with phased implementation approach, the fast and instant payments module is scheduled to go live by the end of the month. Ay man, bese ngiyakuchecka lo. Akusuye July. Yo man, nguJune nyalo. Let me read this sentence so that you catch it correctly. In line with phase implementation, they know why I'm doing this. The fast instant payments module is scheduled to go live by the end of July 2024. The project life cycle is planned to be fully implemented by March 2025. Program Director, allow me now to talk about FinTech. I saw some students from the university. Please, if you are sleeping, wake up. The bank is continuing with its research and development of a central bank digital currency journey. The Digital Lilangeni is a retail CBDC that is designed to ensure that eMaSwati continue to have access to central bank money even when transacting digitally. As part of the process, the project team conducted a proof of concept with bank staff to gain real-life user experience of the CBDC. The proof of concept afforded the bank an opportunity to test the CBDC platform that we had been working on, and also to test the design features of the Digital Lilangeni. The proof of concept was extended to the Eswatini International Trade Fair, where eMaSwati got an opportunity to learn about the CBDC and got first-hand experience on the practical usage of the CBDC. 2 financial service providers were able to develop and integrate their CBDC platforms with the Filia platform, also getting an opportunity to conduct tests in the proof of concept environment in readiness for the pilot. Following successful implementation of the proof of concept, the project then moved to pilot phase. This marked a significant milestone for the bank, as this meant using the CBDC in the live environment. The pilot program was conducted with one financial service provider and merchants. The collaborative effort provided the bank with invaluable hands-on experience in developing a CBDC solution. The bank has made significant progress in understanding CBDCs and will continue to research and build capacity in this area. Ladies and gentlemen, the bank continues to research and monitor developments in cryptocurrencies. In this vein, the bank commissioned a study to understand consumer interaction with cryptocurrencies, including their attitudes, awareness, and comprehension of the technology as its associated risks. This study was conducted in partnership with the Eswatini Economic Policy Analysis and Research Center. The study revealed that the number of participants engaging on cryptocurrencies in the country is somewhat low, with only 8.6% of respondents reporting involvement primarily through exchanges based in neighboring countries. The study also found that 48.4% of respondents have limited comprehension of cryptocurrencies. About 45% of the participants reported having been scammed previously. 45% having been scammed previously. A word to the wise is sufficient. In response to these findings, the bank will continue to provide educational material on the risks associated with cryptocurrencies, on how to avoid digital financial services scams. The report is available on the bank's website. May I emphasize that virtual service providers are currently unregulated in the country and have been authorized to offer financial services. The bank is working collaboratively with the Ministry of Finance and other relevant stakeholders to develop a national policy position on cryptocurrencies. Program Director, ladies and gentlemen, I will now move forward to touch on financial surveillance. It is worth noting that Eswatini has successfully implemented the CMA cross-border foreign exchange transactions reporting system, which connects all banks and foreign exchange bureaus to the central bank for purposes of reporting foreign transactions with the rest of the world. This new version 3 now captures more transactions, which boasts of more coverage in the transactions between Eswatini and the rest of the world. This initiative will not have been achieved without the good collaboration between the bank and its key stakeholders in the banking sector. Hence, we are grateful for this milestone. Can you please again give the banks a big hand of applause? Ladies and gentlemen, I will now move on to touch on financial integrity. The bank continues to collaborate with other stakeholders locally and regionally in its pursuit to contribute towards the strengthening of the country's anti-money laundering and counter-terrorist financing and proliferation regime. This has resulted in anti-money laundering and counter-financing of terrorism in Indaba that took place in July 23. an initiative that brought together all AML CFT stakeholders, parliamentarians, media, public, etc., to discuss the AML CFT PF agenda. The bank has successfully obtained technical assistance from the Eastern and Southern African Anti-Money Laundering Group to train AML CFT PF stakeholders on combating terrorism, financing, and targeted financial sanctions. The bank has participated in reviewing the country's anti-money laundering and counter-terrorist financing and protection financing omnibus law to ensure technical compliance with the 40 Financial Action Task Force standards to qualify for re-rating of the mutual evaluation outcomes. The bank also participated in the recently conducted AML CFT National Risk Assessment and Terrorist Financing Threats and Vulnerabilities. Moreover, the bank is continuously enhancing the anti-money laundering and counter-terrorist financing and proliferation financing regulation framework to ensure a robust and effective AML CFT-PF regulation and supervision. Program Director, I will now move forward to touch on financial inclusion. It is worth highlighting that the bank is currently participating in the implementation of the National Financial Inclusion Strategy 23 to 2028. This aligns with the bank's financial inclusion strategic objectives, where we want everyone included in the formal financial system. As a bank, we see the risk of financial exclusion as more harmful to the integrity and soundness of the financial system. The CBE, in consultation with the Eswatini Bankers Association, developed and approved the inaugural sex disaggregated data. Did I call this word correctly this time? Thank you. I practiced it last night. Ngishayele ntandla nami. Ngilale nga-1:30 ngipractice leli gama leli. And respective templates in November 23. The implementation of the SDD framework underpins the bank's endeavor to advance the financial inclusion disclosure, in particular women financial inclusion. The framework is a tool for collection and analysis of sex disaggregated data, which is a central idea for CBE's financial inclusion imperatives, as espoused from the National Financial Inclusion Strategy. The bank is also spearheading the inclusion for forcibly displaced persons into the formal financial system. In collaboration with the relevant stakeholders, the bank, pursuant to a diagnostic study and an in-depth AML TF risk assessment, have delivered on a Know Your Customer checklist for financial institutions that will guide them in the onboarding process of forcibly displaced persons into the financial system, as informed by the understanding of the peculiarity of this sector. This will create an enabling environment for the participation of forcibly displaced persons in the financial sector. Ladies and gentlemen, following the launch of the National Financial Inclusion Strategy 23-28 in May 24 by the Minister of Finance, the bank will continue to drive and support financial inclusion agenda for the country in various aspects, in addition to the already mentioned. I will now move and speak about currency developments. During the review period, March to March 24, notes issued amounted to 6.8 billion, same value as issued in the previous year. Coins issued over the period amounted to 38 million, indicating an increase from the 34 million reported in the previous year. As at the end of March 24, currency in circulation was 1.35 billion, indicating an increase from 1.24 reported the previous year. The bank reprinted the 200 banknote, and it was released on 6 September 2023. There were mainly 3 features of the 200 banknote that were updated, and they were as follows: the signatures of the two governors, the signatures of the current governor and the Minister of Finance, the bank's name from the current name conversion from Swaziland to Eswatini. On the reverse side of the banknote and at the top right, there is Central Bank of Eswatini in capital letters instead of Central Bank of Swaziland. The printing date of the banknote, 6/9/2023. The bank has noted a decline in discovery of the uncontrolled dye-stained banknotes resulting from ATM bombings. The bank continues to publish notices on social media platforms educating the public about dye-stained banknotes. The public is reminded that dye-stained banknotes are presumed to be proceeds of crime and is advised not to accept dye-stained banknotes and to report such notes to the CBE or the nearest police station. The coin management efficiency project yielded positive results since the pilot of the coin vending machine at a retail outlet in 21. A total of 6.5 million worth of coins was collected during 23-24 financial year. And since the rollout of the coin vending machine in December 21, a total of 14.7 million has been collected. The public deposits in the coin vending machine, which produces a receipt that you utilize inside the shop to buy goods. The public is reminded and encouraged to use coins in their possession for purchasing goods and services to ensure the effective recirculation of the coins. During 23-24 financial year, the bank designed and produced an E50 commemorative bank note and coins, which were launched during the CBE's 50th anniversary held last month. However, the E50 coin, commemorative coin, is not for circulation, but the E50 note is for circulation, has been sanctioned, is being gazetted, and you'll be seeing it shortly in circulation. Ladies and gentlemen, let me make some final remarks on financial sector stability. Looking at the ever-changing and complex financial landscape, the CBE remains attentive to the challenges that may arise in the near to medium term, as these have potential to pose risks to the financial system and weaken its resilience. Consequently, the bank engages in continuous monitoring of economic developments to ensure that emerging risks are promptly addressed to preserve financial stability in the Kingdom of Eswatini. In the past year, the financial system demonstrated resilience as risks were broadly contained. Ladies and gentlemen, in conclusion, let me emphasize the following. The year 23 presented a number of challenges at global and regional level, which had a spillover effect to the domestic economy. Even though inflation moderated at a faster rate than expected last year, risks persisted, and therefore monetary authorities kept interest rates steady at restrictive levels. Domestically, inflation has fairly moderated, and the outlook points to a further moderation. However, risk to the outlook persists and the global environment remains highly fluid. The bank will continue to monitor developments at global, regional, and domestic level and use all the instruments at its disposal in pursuit of its price and financial stability objective in order to ensure that an environment conducive for sustainable economic growth is realized. Finally, I would like to extend my sincere thanks and appreciation to the Minister of Finance, the PS, and all the officials in the ministry, the bank's board of directors. Now that's the time to clap. Thank you, board members, for your counsel, guidance. Members of the MPCC members, well, I think we must reword it. Members of the MPCC. Now, if you say members again and you started with members. Financial institutions here present, all staff of the bank, as well as other key stakeholders for their cooperation, commitment, and dedication to the attainment of price and financial stability that is conducive to economic development of the Kingdom of Eswatini. I have no doubt that I can continue to rely on them for unwavering support and dedication in the execution of our mandate in the interest of all Emaswati. And lastly, I really want to express deep gratitude and appreciation to the team at the bank in your various capacities, in the various portfolios, for the spirit of professionalism, executing with speed and excellence. And I want also to thank you, particularly for putting together this annual monetary policy statement. I am just a mouthpiece, riding on the shoulders of giants. And for this, I'm truly grateful. Good morning.
A round of applause again for the governor. Now, the time we have all been waiting for, the Q&A. So I think we will have mics, and I'm not sure, Director, if we have our Slido in working. So while we are waiting for Slido, I will give an opportunity for us in the House to ask the governor the burning questions that we've had as he was articulating his speech, his presentation. Any going once? Loz, the mic? This one? I want one that's going to move around. Where is it?
Thank you, Governor. Sanibonani nonke endlini. Igama lami ngimuzi ngwakabhela. Governor, I wanted to ask, so we celebrate the growth in GDP, but I think maybe it might be useful to plot a graph around the unemployment, try to see that it actually goes on opposite direction. The impact is there. But my real question is around the government bonds. So the JSE bond is listed at 11 point something % over 3 years. Locally, 10-year bonds are 12%. In South Africa, the 10-year bond is around 10%. I'm just asking, will government afford this, given that 11.8% over 3 years? Is it not pitched so high, Mr. Governor? I think that's my question. Thank you.
Thank you. Good morning, everyone. Thokozani Nkambule from the Dwala Insurance. Thank you, Governor, for the wonderful presentation, and it gives hope to some of us in industry, especially when you look into the prospects of growth. It's not that significant, but there is hope for the future for us in industry. Just out of curiosity, what plans are in place for the central bank, particularly linking to the issue of ensuring that there's a stimulation of reserves within the country? For us in insurance, you'd find that we handle so much cash, but we export a lot of the money because there are no policies or there's nothing that's really enforcing or allowing us to develop enough capacity to retain risk. I'll make an example. You'd find that in a year, I've registered revenue of 500 million. But what I've actually kept in the country is 200 million because I'm exporting all the money to other countries. But if there were certain policies in place that would encourage that such funds are retained within the country, in other countries you'd find that there'll be laws that are inhibiting foreign insurers for participating in risk unless local capacity has been exhausted. So in line with us helping in building up reserves in the country, I think in the future, those are some of the things that would boost us as players and also make sure that the banks retain the money. Because for now, you'd find that the money is in transit. 48 hours maximum, I'll push the money into the bank, but before you know it, it's gone to another country. So what plan is there for the central bank to make sure that in the future, there's that kind of protection for local players?
Thank you, Governor, for that very informative message, full of hope and delivered with doses of charisma here and there. Governor, I'm noting with excitement the bank's ambitions for digitalization, and I would like to find out from the bank that, you know, with all of what has been shared here on adopting digital platforms and your digital Lilangeni, should we anticipate that in future the bank shall take a stance where you discourage the use of cash and encourage the use of these digital platforms, Governor? I will share with you that the year that you do that, you would anticipate that no less than R1 billion emalangeni in tax revenues will be collected, because currently we are not collecting about, and this is only a quarter, we're not collecting about 4 billion from just retail, from wholesale and retail only, because a lot of these transactions occur in a medium that is very, very difficult to chase and to monitor. So that is my question, Governor. It is kind of encouraging you to take that path, Governor. Thank you.
Thank you very much, the questions table. and thank you for the question on Slido. I did say that we are a team at the bank, so I would ask my team to please feel free to intervene and respond. Let's start with the question of GDP and unemployment. And thank you for the question, Mr. Bell. That's why I paused at that point. You need to get GDP growth on a certain level, on a sustainable basis, for it to translate in actual poverty eradication and job creation. If you recall, GDP growth just coming from COVID shot up to, initially it was a figure of 7.9, was actually over 10%, coming from a very low base, negative. The following year, from 10.7 odd, we shoot down to 0.5. That's why then you see this unemployment. Then it's picking up now to about 4.8 and the levels that we have said. I like the ambitious and compelling commitment by the current administration to grow GDP double digit. If you look at Rwanda, for an extended period, they were growing their economy by between 8 and 11 or 12%. And you go to Rwanda and you see it visible through infrastructure, nobody in the streets even begging, in fact, beginning to import. And it's a population of 14 million, land linked, they are landlocked, we are land linked. So the potential is there, but your observation of tracing unemployment with growth is valid. And I can tell you, it's negatively correlated as it stands right now. Well, it's positively correlated. So in other words, we are seeing a higher increase of unemployment because of the low growth in GDP. But the economy is their job to do that. The government bonds, I was looking for Dr. Homo Melvin, he's not here, but Helda is here. Answer, Helda. Come here, what done? Reserves stimulating strategy, very, very excited. Yeah, you'll take that question. Reserve stimulating strategy, I am so excited we are mentioning this as a country. We are, please do cover it as well if you want to supplement. We are intentional in dealing with the issue of reserves in this country. One solution, the team is here, our head of IT, by implementing and director operating the national domestic switch, that in itself, from a process efficiency, sovereignty of our country, will result in curbing outflows. So that's why I posed. Everywhere I posed, please don't take it, it was not to entertain. It was to make a significant point from a strategic direction point of view. So, including looking at precious metals. This country is endowed with precious metals. The question is, do we retain these precious metals, beneficiate them, get the true value, store them in our vaults, or when sold, the forex flow back into the country? Because that will consequently result in reserves augmentation. Deepening our capital markets is crucial to have investable instruments towards capital formation and capital investment, so that your cash is not looking for money market instruments, but is looking for capital formation investment instruments. I think the country has done well. We've got the laws, the asset local requirement, 50%. In fact, we can even take it to 100%. It's pointless when you don't have a deepened capital markets and financial markets. And I want to applaud them because as part of the strategy, our financial markets team started intervening in the market, buying Forex, especially for the exporters. And this is all aimed at augmenting our reserves. So you will see more unfolding in our conversations going forward. Digitization, you speak. Come here. Buto hlala. Ungahlali kule situlo sa minister. Mama uhlale kule sam. No, hayi kule sam. Hlala la. No, uthi ufuna lesam. Ah, vele ngiyambona nasemhlanganweni vele uweta kanje usika situlo.
Thank you, Governor. I think I just want to reiterate some of the same points that the Governor is saying, particularly to the question of domestic assets and in creating investable instruments so that our money that is saved locally is not flowing across the border to find a home to invest in. And so I think that is one of the initiatives we're keenly pursuing, creating and deepening those capital markets to ensure that our local funds remain local. And you have the 50% obligation, but there is not saying that US market players cannot keep 100% locally. That's what we want to encourage, but we do understand that you need those products to invest locally. One of the good stories that's coming out of this policy statement is the growth story, and hopefully that savings and even through the banking sector, through the NBFIs, is finding itself into investable projects that are going into the real economy and helping us to grow as a country, so that our local money is working for our local economy and seeing that growth there. So I think there's various interventions that we are seeking to do, but again, I don't think we want to apply come with raising the capital or the domestic asset requirement and forcing money to stay locally. We wanted to find a natural home in the local environment. In terms of the bonds, yes, this was the inaugural issuance of the JSE listing. It's one of the strategies we have to diversify government's financing sources, and obviously we want to see the reverse of this. We're usually seeing our local funds flow into the South African market. We're saying, no, we can play in the South African market and introduce government as an issuer as one way of diversifying the government sources of funding. We have not seen a lot of local flows, even though that is allowed, to our domestic bonds, but we did see this as a strategy to tap that South African market and the potential of that for government to access some borrowing. I think as an inaugural issuance, it's always a bit about price discovery and where you're going to get. I was just noting the latest bond results to correct some of the figures that were quoted by CEO from Old Mutual. So our local tenure is closer to 13%. The last issuance we had was 12.9. Our local 3-year was at just over 11.25%, the last auction that cleared. So I think we do obviously benchmark against the South African market because that is quite a deep liquid market, and obviously considering sort of the credit spread, liquidity spread that you might issue against the South African market, I think 100 or 150 basis points is quite a reasonable spread when you look at the South African benchmark to where we cleared. As I say, this was an inaugural issuance. It's a little bit about price discovery, getting your toes in the market, and I think as we develop that confidence and start to reach a lot more of the investors in South Africa and go and sell our positive story to that, we will see the interest growing there. I think it's almost a no-brainer if you can get 150 basis points versus what you're getting in a South African security, where you might not see the risk to be too much extra to get that premium above that. So I think The plan is that we will go on a regular basis to tap that. The whole program is a 4 billion program. This was an inaugural issuance, and we will, at least on a quarterly basis, probably be going into the market and just making our name there and presenting ourselves. So I think that's what I wanted to say.
All right, I just want to, well done. I just want to give 2 points there. One, rest assured all stakeholders that as a central bank, we are sensitive and we are conservative. We will never allow government to outprice. So we do look at benchmarks as he has referred. So I did hear the issue, is it too pricey? It is referenced, and you look at the tenure. This is a 3-year bond, and it will change depending on the tenures that will go in the market. And also, by the way, it's good to bring all this money that we have in South Africa back home. We just want to make sure that it is South African money coming into the country. Safakwa kabo santini ngema pension funds ethu akakabuye ngapha.
Thank you, Governor. Good question, and I understand Mr. Ngambule's motivation to digitize the collection. I'll talk from a technocrat standpoint. And Governor, the response is not just an IT response. I think I'm talking on behalf of currency, because they are the ones putting money into circulation. I think the mandate of the central bank is financial inclusion. It includes financial inclusion. And we believe we are not mature enough to fully digitize and remove cash, because it will exclude vulnerable people from the economy. It's an involved journey to move into fully digitized economy, because it involves technology infrastructure. So coverage of technology should be countrywide. The cost of technology should also extend to everyone in the economy, as well as then the affordability of those devices. So I think it's a journey. We are not yet there as Africa, and it's only developed economies that have managed to limit cash. So I believe, Governor, at this point, if we are, as technocrats, we advise you, we would say we are not yet there. Cash is still going to be with us. There are other means of controlling that we are taxing those that we need to tax, rather than squeezing from a technology standpoint. Governor, that's our stance.
Thank you. I said mabanbita futhi. Lana kuyasenjendwa. Just to say that cash, by the way, carries a lot. It's not just cash. It carries the heritage of the country. It's got lots of symbols. You know, we don't see cash as like you go and just buy. We see a lot in there. And if you look even developed economies, there will be an element of cash in the system. And I think you put it very, very well. But I just wanted to add, you know, that socio-economic aspect of cash. But from driving efficiencies through payments, through minimizing cash, bulk cash, as you can see, we count out checks. You know, that's a process. It's a journey. Then, DG, be ready for that last question. I did say that the Lilangeni Rand anchors our monetary policy. Just the DG you'll be ready for that one. Just answer it in a very simple term. What does it mean and what are the advantages? Or you want to Director Research? Nendandla wamlo mhlangano. Oh. Completely out of the woods regarding the financial risks. No, there is nothing like financial leaks. Is alleged. The alleged leaked documents. As per the Swazi secret stories, I think we have come out clearly to the public. And by the way, today, there is a statement that we have made. Do read it. It points clearly what it means to the central bank with regards to the leaked documents, the implication and what it means to the commercial banks and the central bank in terms of reporting suspicious transactions. So I think fundamentally we need to accept that. Then the second point to accept is that it is the duty of the banks to do and report suspicious transactions. 2, banks are treated the same, are regulated the same. 3, it is the duty of banks, and I also being a banker, to protect information of customer. You don't play and publish customer information. Can you imagine if Vuselelo can tell the world that a whole governor is running an overdraft at Standard Bank? Can you imagine? Maybe I'm running one. So that, we must know that banks, financial institutions as a global practice. So that's why we condemn at the highest the alleged leaked documents. And I'm saying alleged leaked because they could have been handed, they were not even leaked. One thing I can assure you is that a forensic investigation, even the central bank is under investigation if the alleged leaked documents in any form or shape came through the central bank. So I want to make this, are we out of the woods in this regard? There were some articles, and some people think, oh, these are the ones that are spoken of. Don't rest. Your name might be still there in the alleged leaked documents. So I just want to make that very clear, but we do not want to politicize. We are technocrats. We need to ensure the financial integrity of the banking system and the financial system in the country. Hence, we take this posture. I think you need to answer that question. Brightwell, dear Masako. I will pendule. Lena says he pendule arrest to discourage the use of cash, not fair. What is the governor's view of this? I think I've already said. DG, can you please take the rent, and Beverly, can you take the deposit protection? I say Koguwe. Upipsiga. What upsiga? Budokaza, water. But don't do a report psiga. Just say, what are we doing? What it means. Pendvula DG. Nael Rand, Besen Pendvula Leya, Ungachaza Le Saku is uploaded to what attribute increase? It's mainly driving efficiency and ensure that, you know, it's linked to economic growth. But our Pendvula Naibes is only get about Pepsi.
Thank you, Governor. Before I answer this one, there's a quick comment that I want to make in terms of the reserves. EMA reserves are depleted when we import from the rest of the world. One critical issue that we are battling with is producing to feed ourselves. So as long as we are going to import food, import clothing, import, you know, the day-to-day needs, we are always going to see EMA reserves are depleted. Therefore, we need to encourage business, innovation, production, manufacturing, so that we then export the surplus and get the foreign exchange to bolster our reserves. The Lilangeni exchange rate peg. So our monetary policy is anchored on a fixed exchange rate, 1-to-1 to the rand. What are the advantages of that? We trade predominantly with South Africa. So having our currencies linked is an advantage. Even though Lirandi is part of the reserves, because it's 1-to-1, we don't deplete the reserves significantly assuming we were delinked from the rand and we import 70% from South Africa, it means we would see that physical outflow because we'd be settling in dollars and Helder will be crying every day. So that's the advantage. We are strongly linked to South Africa, trade, social, even political. We have those relationships that date back from 100 years ago, hence the question on SACU. Because we have that trading block, it is advantageous for us. There was one question on the small-scale guarantee scheme. I think it, okay, go.
Good morning. Briefly, I would say the implementation of the Deposit Protection Fund is in two aspects. First, it's the promulgation of the law, which enables the implementation of the fund. That is a process that is still pending with the authorities in the Ministry of Finance. Then second part of the implementation is with regards to developing the framework of the fund that defines the coverage limit of the depositors. It defines the size of the fund and also the premiums payable by the members of the fund, which is the banks. So we are still working on that aspect internally. We are doing the stakeholder engagements with all the stakeholders. Once we have completed that exercise, coupled with the promulgation of the law, we believe that the fund will be up and running. Thank you.
Shalentandla, siyabonga kakhulu Usika. This is a very important, in fact, that's why I wanted to respond myself on that, the schemes, the small guarantee scheme and the export guarantee scheme. What we have done in the bank, we have restructured and taken these schemes to be under financial inclusion so that they have got a focus, and I've put it under the portfolio of the DG. So we, in other words, we are making it a strategic intent, not to be passive about the schemes, but to be intentional. The small scale portion has done very, very well over the years. I think Director Operations looked after this for many, many years, really grown. The one that has been struggling is the export one. So what we are doing as a bank is again to be targeted on this. So instead of shoot and aim, now we want to aim and shoot. So for example, picking a certain or a particular export product or sector, and then incentivize, engage the banks. By the way, we've widened this. If I'm not mistaken, even non-banks now participate and say, there is an opportunity in Taiwan. We have got 100 and, fast, how many products in Taiwan that 199, I'm Shalentandla now, at least we are kumbul. I think unemanga 190. I'm joking. 199. 199 products that can enter Taiwan, duty-free, access a huge market. So we can target one product, back it, and we know the market is secured. So that is how we are going to deal with this. And I really, really am excited with the efforts that are made by the team to drive this strategic intent, because it will make a difference. And when that Forex comes, as the DG say, bolsters our reserves. So we need to be self-sufficient as a country and be export-driven economy. To the PEC that the DG mentioned, we can de-link, but you can't de-link if you don't have reserves. You need to have strong reserves. Back your currency so that it is stronger. If you are still importing this country will go to its knees in no time. Inflation will shoot the roof. Our pension funds will have no value because we are so much interlinked. And by the way, by being part of a union, I see this even ECOWAS, you know, in the Eastern Bloc, even the West, the Western countries, that the Eastern Bloc, they organize themselves into a union to help to minimize shocks in the system. So we mustn't speak lightly about, oh, let's just delink. I have heard this, Governor, delink is the right thing to do. No, they are fundamentals that informs the link. And we don't want to place this nation at risk. One key that we need to work together as a nation, bolster the reserves, have strong reserves. That's what Botswana did. And that's why they've got what is called a crawling rate. It's actually not a fully independent currency. It's called a crawling rate. It's tracking the rand and tracking the dollar, underpinned by their reserves. So I just want to mention this so that we are not irresponsible with our statements. Thank you. Now, I'll be unene as we select DG.
There's one burning question, Governor. You are given the opportunity because...
Thank you, Program Director. Good morning, everyone. I'm Hlatshago Samgeliso, UNESCO Economics Society President. I'm happy to be here. Thank you, Governor, for such an insightful presentation. I have a couple of questions. In your presentation, you mentioned the bank that is actually currently implementing the National Financial Inclusion Strategy. I'm happy about that. Okay. Thank you. My question is, when is the bank considering to introduce central bank digital currency, which I believe that will play a pivotal role actually promoting financial inclusion in the country? The second question is, with the current ongoing political uncertainty in South Africa, what should we expect from the monetary policy perspective? Thank you so much.
Well done, Economics Association President. President. Akasuye chairman. President. Thank you for acknowledging financial inclusion. And I want here to acknowledge and appreciate, especially, you know, the service providers, what banks have done in terms of making banking accessible using technology. Some have reconfigured their branches so that more inclusion is happening. The mobile money operators and many others that are doing financial inclusion in this country, it is highly commendable. And I see, Linda, you need to give me the correct number. Is it 83% or 87% financial inclusion? So this is a very big number, that in this country, people are financially included. And in my policy statement, I spoke about certain sectors, the disaggregated data, the, what is the other name, Goj? About disadvantage. Eh? Yeah, and they're displaced. So we still have pockets that need to be included. So we don't want to start relaxing, you know, rest on our laurels. There is so much work to be done. Two, we need to deepen financial inclusion. It should not just be pay with Momo, but is insurances, is savings, is investment, various pockets of investment, deepening the financial sector, buying bonds, retail bonds, issuing retail bonds, and let the public, the population, participate right across the spectrum of the economy. So that's why in your case study as the Economic Association, bring suggestions to the team how we can accelerate this and write a paper. Data is available. With regards to the CBDC, I did speak about it. We need to be very careful. CBDC peaked and many countries were working on it. We have really advanced, but we need to see CBDC in our context in particular, how it helps us with cross-border. As you know, once you've issued the CBDC, it's now digital currency. Will I be able now, being a digital currency, to use my digital currency in South Africa, or how do I do the exchange rate effect on it? Because right now I have to change my Malangeni to be accepted in South Africa, but the rands are accepted in Eswatini. Maybe alignment in the CMA, in the CBDC, is the way to go, so that my digital currency, I don't have to carry rands, I can use it in South Africa. Similarly, South Africans can do it here. So that's why it is a research, we are looking at it, we will implement it at the right time and not cause risk to, and it's got lots of monetary policy implications as well. The last one that you asked, it's a very difficult one because politics evolves. We know that South Africa has just gone through elections. The only comfort we take as a central bank is that the governor of the Central Bank of South Africa was announced 8 months ahead of his contract to be continuing. So that helps in terms of stabilizing, especially monetary policy. If you look as the elections were going, government of national unity, what's the other word that they do? Coalition. The rand took a slip. And we suffer that because of what she mentioned. We are pegged to it. We have got nothing to do other than trade, not the politics of South Africa, but that political dissonance consequently affects us. So I cannot really say this will be the outcome of the political dispensation transition in South Africa. The only hope we have is that these are matured politicians, they've got the nation interest at heart, and we shall continue to collaborate and work together in the CMA and also in the customs union. Thank you.
Thank you, Governor. Slido, Segutema questions, and I don't see any pending questions. Okay, this is a special dispensation, Governor.
Thank you. My name is Amani from the UNESCO Economic Society. I heard that in the last financial year, 6.8 billion notes and 38 million coins were issued. That's a lot of money. So where is the money made? And why is it not made in Swaziland so that we can increase the employment opportunities for the youth? Thank you.
Ngingumprofeti buka ngiyamtshela ngithi lungile buya la utophendvula nang director operations lona lo printer le mali aphinza ayicirculate akachazi siyabonga kakhulu director operations Lungile Dlamini.
Sanibonani ekseni. I almost flew under the radar. Governor Solyankhoma sokoma Lungile ngithi ngidawuthini Governor. Thank you for the question. Maybe ukuchaza nje ukuthi when we speak about 6 billion odd going into circulation, we need to link that with 6 billion odd plus minus also coming back from circulation. So just to explain the currency in circulation, you have us demanding currency, siye emabhange, siyo withdraw. That increases currency in circulation. You then have us again, sasibhadeleti kulfis siya depositor. They go back. That money goes to the banks and it comes back to us. So e-currency in circulation in lele, sele, still in circulation. Now the question was, why don't we mint and print in country, sito wanzisa imsebendi? It would just be to explain, Gutsi, the minting and printing process is highly specialized. Dangwane nje kude longatsi utasi printela ema banknotes noma asmintele ema coins. And noma angavuka kusasa athi sokhona. We would need to assure ourselves as the central bank would see this is a secure facility one. Even the banknote paper, which is called a substrate, lezi sebendisago, is actually done leyethu nje. We are currently using Gisek and Devrient, and they are based in Germany. So kuqale nje kwakhiwe leli phepha, kwakhiwe the security foils, the security features, the special inks. So sisesekashane, I believe, as a country, for us to be able to do our own minting and printing. It doesn't mean it can't happen in the future. In South Africa, they do have a banknote company where they do the South African rands, and they do have a South African mint, Labendema coins, previously as a bank. We have actually used the South African mint to mint the kingdom's coins. So ngatsi gwanyalo, sisengafiki kule capability that we can be able to do these things ourselves.
Thank you, Ngozi. We are drawing to the end of our session this morning, and I was just double checking something. Okay. As we draw to the close, distinguished guests, ladies and gentlemen, it would be amiss of me if I didn't highlight a few things that excited me. One of the major highlights from the governor's presentation was that the financial year 2023 was largely characterized by monetary policy tightening, not just in Eswatini, but across the globe. And it was because we had these developments that were driving inflationary pressures. However, I do hope that we appreciated that the governor today was not articulating interest rate position for today. He articulated interest rates developments, both backward-looking and forward-looking. And I do want to believe we understand that whenever he pronounces interest rates, he does it at a different forum. So this was taking us back to how we have fared with our monetary policy implementation and what we project for the future. But agasho ukuthi interest rates ayakhula namuhla or ayehla. In his presentation, he also emphasized the bank's continued commitment to monitoring global, regional, and domestic developments, and using all instruments at the bank's disposal to pursue price and financial stability. He underscored the renewed focus of the bank on financial inclusion. And it matters for the bank because if people are not included, monetary policy is weak. So when you see we increase interest rates and it takes us about 6 months to see the impact, it is because a part of the population is not included. Ladies and gentlemen, this provides an environment for us to continue engaging. We do not end today. our doors are opened. The governor is available. You can ask questions, follow-up questions, and you can use our different media platforms. In this regard, the central bank will continue to enhance oversight to make sure that our banks remain rigorous, efficient, effective in financial intermediation. As we come to the end of this event, on behalf of the bank, the board of the Central Bank of Eswatini, the management and staff, I thank you all for taking part to join and participate in this year's Governor's Annual Monetary Policy Statement. The celebration of the bank's 50th anniversary was a testament of the support the bank has received from its stakeholders in supporting the delivery of its mandate. We hope that your interest and commitment in supporting the bank and the bank's initiatives will continue even in the next 50 years. It will be remiss of me if I don't particularly thank our board that keeps us on our toes, the Monetary Policy Consultative Committee that asks all the difficult questions, the team that put together today's event. May we please have a round of applause for all our stakeholders. In closing, may I continue to encourage, as I've already indicated, continued engagement with us using the different platforms, discussing today's developments and any other issues that you want to raise with the bank. With these remarks, I thank you all. I am not sure what's going to happen there outside, but as per our tradition, I want our resident pastor to take us back to the Lord. Miss Isa.
I'm being reminded that as you go out, you will receive a copy of the statement, a booklet. As Tanazan, Heavenly Father, in the name of Jesus, we asked for your presence when we started this gathering. We thank you that you have been with us. We do not take it lightly. We acknowledge you as the King of Kings and the Lord of Lords. Seto Puma Babe, Hambanatsi, protect us on the roads and do it all for your glory. In Jesus' name, amen.